Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Cohu Inc. Annual Report. Cohu Inc. offers a wide range of businesses and services that cater to the semiconductor industry. The company provides equipment and services for testing and inspection, including test metrology automation systems, microelectromechanical system test modules, and thermal subsystems. These products are designed for both wafer-level and device package testing. In addition to its equipment offerings, Cohu also provides various services such as data analytics software, application, and consulting services on its products. The company's data analytics product, DI-Core, is a software suite that optimizes equipment performance by providing real-time online performance monitoring and process control. Cohu's portfolio of businesses and services also includes artificial intelligence-based process control and analytics-based monitoring software. Furthermore, the company offers training on the maintenance and operation of its systems, as well as spares and kits for its products. Its customers can also purchase various parts and labor warranties on test and handling systems and instruments. The company markets its products through a direct sales force and independent sales representatives. With a history dating back to 1947, Cohu has established itself as a leading provider of semiconductor test equipment and services in the industry. Cohu Inc.'s stock price has experienced a significant surge in the past year, with an increase of over 41.51%. This growth can be attributed to several key news events and positive developments for the company. One major factor contributing to Cohu's stock price increase is its strong Q4 2025 revenue performance. The company reported a 30% year-over-year increase in revenue, surpassing analyst estimates. Additionally, Cohu's recurring revenue grew by 25% year-over-year, indicating a stable and growing income stream. The momentum in high-bandwidth memory, HBM, technology has also played a significant role in driving up the stock price. Analysts have highlighted Cohu's potential in this sector, with Needham upgrading its rating to buy in January 2026. The company is targeting $15 million minus $20 million in HBM revenue for 2026. Positive analyst upgrades and price target revisions have also contributed to the increase in stock price. Several financial analysts have issued positive ratings and increased price targets for Cohu, with an overall consensus of moderate buy. This growing confidence among analysts has led to a notable increase in institutional investor holdings in Cohu. The acquisition of Tignis, Inc. on January 7, 2025, may also have contributed to the positive sentiment and growth expectations surrounding Cohu's stock price. Overall, these underlying positive developments have driven up the stock price, despite a temporary dip following a surprise Q4 loss. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company are multifaceted and can be attributed to several key factors. Firstly, recurring revenue from interface products, services, spares, upgrades, configuration tooling, and software analytics has been a significant contributor to growth. Additionally, test automation, inspection and metrology, semiconductor automated test equipment 8, and software analytics have all experienced year-over-year growth. Investment in research and development, R&D, has also played a crucial role in driving revenue growth, with the company allocating $92.2 million towards R&D in fiscal 2025. Furthermore, growing demand for high-precision inspection and metrology, thermal control, automation, signal integrity, and AI-driven analytics has contributed to increased sales. The acquisition of Tignis on January 7, 2025, has also had a positive impact on revenue growth. Stronger demand for AI-based computing applications has further boosted sales, with a 12.7% increase in this area. On the other hand, several factors have led to revenue decline. The loss or reduction of orders from significant customers due to market, economic, or competitive conditions has had a negative impact on revenue. Outsourcing of semiconductor test to subcontractors that are not our customers has also contributed to decline. The cyclical nature of the semiconductor equipment industry has made it challenging for the company to predict demand changes, leading to volatility in headcount and business levels. Failure to develop products that meet customer requirements for innovation and quality has also resulted in revenue decline. Inability to anticipate customers, changing needs, and emerging technological trends accurately has further exacerbated this issue. High competition for skilled personnel, particularly in high-cost regions, has also led to a decline in revenue. The negative impact from the global macroeconomic environment on automotive, industrial, and consumer segments has further contributed to decline. Finally, the product mix of systems delivered to customers has resulted in a declined gross margin, leading to revenue decline. The net income of the company has experienced a decline over the past few years, with a significant drop of 54% in 2023. Although there was a slight improvement in 2024 with a decrease of only 10%, the trend continued downward in 2025 with a 17% reduction. The main reasons for this decline were the increased effective tax rate and the ongoing requirement to capitalize R&D performed outside the U.S. The profit margins have also been affected by various factors, including cost pressures from inflation and rising interest rates, supply chain disruptions, and increased competition and pricing pressures. Additionally, the company's exposure to inventory write-offs, excess and obsolete inventory, and increased inventory reserve requirements has negatively impacted its profit margins. The cyclical nature of the industry and volatility in headcount and business levels have also contributed to the decline. Despite these challenges, there are some positive signs. The net sales have shown an increase of 12.7% in 2025 compared to the previous year. However, this growth has not been sufficient to offset the decline in profit margins, which decreased by 2.2% in 2025. Overall, the company's financial performance remains a concern, and it needs to address these issues to improve its profitability. The company's financial performance has shown a significant improvement in its ability to generate operating cash flow over the past 2 fiscal years. In fiscal 2024, the company reported an operating cash flow of $2.8 million, indicating a modest level of profitability. However, this figure more than quadrupled in fiscal 2025, reaching $31.7 million. This substantial increase suggests that the company's operations are becoming increasingly efficient and profitable, enabling it to generate significant positive operating cash flow. The company's debt level and interest expenses have undergone a significant change over the past year. According to the financial reports, the interest expense for fiscal 2024 was $0.6 million. However, this figure saw a substantial increase of $1.5 million in fiscal 2025, resulting in an interest expense of $2.1 million. This notable rise indicates that the company's debt level has increased significantly, leading to higher interest expenses. Management's outlook for the company is centered around driving growth through innovation. The company has made significant investments in research and development, R&D, and strategic acquisitions to expand its technology portfolio and addressable market. This focus on innovation is expected to drive business expansion and maintain a competitive advantage in the semiconductor test and inspection market. Key areas of emphasis include high-growth opportunities such as HBM inspection, AI applications, and mixed-signal devices. The company's resilient and scalable business model complements systems revenue driven by customer capital expenditure. Management also highlights the importance of continued investment in R&D to enhance existing products and develop new ones. In addition, the company is prioritizing innovation in high-precision inspection and metrology to maintain a competitive advantage. Strategic investments and acquisitions are being made to position Cohu as a leader in semiconductor test and inspection solutions. The goal is also to drive recurring revenue through interface products, software, and services. Overall, management's strategy focuses on leveraging innovation to drive growth, expand the company's technology portfolio, and mitigate foreign currency exchange risk through hedging. The company's financial activities have been focused on share buybacks rather than dividend payments. According to the provided information, the company has indeed bought back shares as part of its authorized programs and repurchased shares in fiscal 2025. However, there is no clear indication that the company has paid dividends, with the exception being a mention of suspended dividend payments. This suggests that the company's priorities lie in reducing its share count rather than distributing profits to shareholders through dividends. That concludes the financial summary for Cohu Inc. Feel free to comment below, and I will be happy to answer them when possible.